Greetings once again and welcome to day 4 of this training program. So today we're going to be rounding up with candlestick types and market structure. All right, remember yesterday I said candles are still structures, all right, market trends. So we have candlestick types, something like that. This is very, very important. If you don't understand this, as we move forward, you are going to be completely lost. You're going to be completely lost. Everything that we'll be doing will be linking back to this. This is like the foundation of trading. You have to understand this first before we can move forward to any other thing. Now, this actually shows that, foundation is always the most toughest part in the building, right? And if you don't put it well, you go up, you will still need to come back down. So understand these candles, because these are the candles that are telling us stories about these charts that we are looking. When you are looking like this, you're just seeing candles, all right? As you can see, we can count so many candles that we are seeing. But now, what are these candles telling us? That's the first thing that we need to understand. We need to read these candles so that we'll be able to understand their language, all right? Now, like I mentioned, candles, they give you the trend of the market. Just like yesterday, I mentioned that. Am I recording? All right, just like yesterday, I mentioned that this can be a single candle, right? This can be a single candle on the daily time frame, which means the candle takes 24 hours to open and close, right? But now we'll go down to the lower time frame and notice if this is a bearish candle, it means it opens up and then it closes down. This is the high and this is the low. Therefore means if we go to the lower time frame on the line chart, we're going to see the opening price like this. Price will open, play around here, go up, create the high that we're seeing now. Maybe it can be created during around 9 or 10 a.m. and then maybe it starts to trend to the downside. This is now a downtrend. It trends to the downside, it reaches this point, and then it creates the low, comes back up, and then it closes somewhere around this area. Now, this is going to be from morning to evening, all right? This is going to be from morning to evening. Let's say the market opening till market close, all right? This is going to be a 24-hour period. Maybe around here will be like 12 noon. All right, this is going to be a 24-hour period, but it can be represented only with a single candle. Therefore means we are having a bearish day, a bearish trend. So if we're having a selling day, it definitely means we're going to be seeing a downtrend on the lower time frames, right? Remember the difference. The lower time frame has so many candles and they're telling you the different movements that are happening within that particular day. Like I mentioned, actually today, or ending this evening, I sent out a setup, a buy trade on Nasdaq, all right, on Nasdaq, and it's still currently moving on now. So price dropped down to this level, and we bought. Actually, sent this to the Discord server. Now, this is still today, right? Now, but that's not where today started. You understand? That's not where today started. So today started around somewhere here. So within the day, we can still trade around this point. Now, let me go back to Euro USD. What I'm simply saying is this. All right, what I'm simply saying is that you have a single candle in each day to trade. Now, to trade that single candle, you're going to be dropping down to a more lower time frame so that you can see clearly what is going on. Right, what is going on intraday. You'll be able to understand how the market is moving within that particular day. Because just looking at this daily candle, you will not be able to say, okay, there was some movement like this. These are areas that you can enter, right? Remember yesterday I say we sell at lower highs, right? We don't sell at a lower low, we sell at lower highs and so on. Now, the bullish part or a bullish trend is just going to be the opposite of what I've been explaining now. Now, away from this market structure, which I just wanted us to go through, I want us to talk about candlestick types, right? We have a lot of candlestick types, but now we're going to focus only on a few of them, which are going to be very, very useful to us. If you want to go and study more, it's up to you, but these few are the most important ones. With my experience, they are actually all that you need, all right? So the first one is called a bullish engulfing. All right, take note that these candle types, I already told you what a candlestick is, right? Now we are looking at candle patterns. All right, candle patterns. So the first candle pattern that we have is a bullish engulfing. Bullish engulfing. Now this is the first candlestick pattern that we have. All right, it is not a candlestick anymore. All right, this is a pattern. We're going to come to a candlestick. There are also candles that have meanings or that have names, but this one is a bullish engulfing. This one is a bullish engulfing. Remember, I mentioned that it's a pattern. It's a pattern means it has two or more candles. All right. Now, this one is a bullish engulfing. This means this is a bearish candle. All right. This is a bearish candle that we have here, and then we have a bullish candle. We have a bullish candle like this. Take note, I said a bearish candle opens up and closes down, right? So if a bearish candle opens up, if a bearish candle opens up and then closes down, the next one has to open down, right? If this one opens down and trades down, good. But if it opens down and trade back up to close above this previous one, it's now what we call a bullish engulfing. Now, somebody should tell me on the comment section what this bullish engulfing means. What story does this bullish engulfing tells us? I'll move straight to the next one, which is the opposite. Let me have the answer on the comment section. The opposite one of it is called a bearish engulfing. All right, the opposite of it is called a bearish engulfing. Bearish engulfing. Now, for a bearish engulfing, we have a bullish candle. All right, a bullish candle, that means what? Price trades up, price opens down and closes up, right? Now, if price closes up, what happens? The next candle is supposed to open next to the close of the previous one. So which means because when a candle closes, it doesn't take even up to a second for the other one to close, right? To open, right? So the moment this one is closing, another one is opening right here. Now, if this one opens and trades up a little bit like this, it's going, as it's going back down, it's going to leave a wick, right? Now, this is where it's traded up to. Now, as it's going down, it leaves a wick to show its highest trading point. Now, if it goes right down and then it trades below this previous one, below the low of the other candle, and reaches somewhere down here and then trade back a little bit up like this, then we're going to have that wick representing that that's the lowest point the candle traded down to. And now we can see that this candle also traded closed above, closed below this one, right? It closed below the low of this one, just like this one closed above. Remember, this is a bearish candle and this is a bullish candle. So this is also a bullish candle. The black is a bearish candle. So what do we have here? A bullish engulfing and a bearish engulfing. I want the story that this tells us. Also, okay. Okay. Tell me that I'm francophone. What will I do for classes? As a francophone, please, we are organizing something for you, all right? So we're going to have your classes prepared. All right. Luis says buyers overshadowed. Okay. Buyers overshadow sellers. Good. Bullish trend. Okay. Buyers are in control of the market. Good. It means buyers are more strong than sellers. Good. The market is moving up. Good. Bullish engulfing means manipulating to the downside and distributing upward. Lawrence, okay. Bullish engulfing, buyers with strength. Bearish engulfing, sell dominates. Buyers are taking up a hand. All right. The bullish candle in the engulfing pattern signals strong buying pressure, overpowering prior selling pressure momentum, and indicating a potential trend reversal upward. Wow, Michael, that's impressive. I think that's the best answer so far. Sellers are taking over the market. Michael has given the best answer so far. Let me read that again. You guys should listen. The bullish candle in the engulfing pattern, which is this first one, right? All right, which is this first one? This one. The bullish candle in the engulfing pattern signals strong buying pressure, overpowering the prior selling bearish momentum and indicating a potential trend reversal upward. All right. I think that just settles everything, because if you look here, you'll notice that, okay, maybe here we can say the range of these sellers, let's say there were about 1 million sellers on this other one. Then how many sellers do we think we will have here? Maybe 1.5 million buyers. All right. We're having a million sellers here, and then buyers overshadowed the selling pressure. Now, let me quickly show you guys something concerning this alone. Remember, Michael also said there's a signal for a trend reversal or continuation to the upside now, right? It simply means if we want to indicate this bearish candle, we are going to have something like this, right? It's going to open up and then it closes down. Now, this bullish candle opens exactly where this one closes, and we can see that it traded down again before moving back up, and when it went up, it closed above this one, closed above that high, right? So what are we seeing here? We see a bearish trend, and then a bullish trend takes over. So now in a bullish trend, we expect this bullish trend to continue, which means that the next candle that we can possibly have here is likely going to continue to the upside, right? Take note of that. It's likely going to continue to the upside because we were having a downtrend and there was a reversal. And this candle confirmation shows that buyers have overshadowed the sellers, or buyers have come in more, or the demand is now more than the supply. Therefore, prices are rising. All right. I think the explanation is just opposite to the bearish engulfing. This is one of the best candle patterns that you're going to see in trading. All right. The best and the most effective candles that you're going to see in trading. Take note of that. Take note of that. If you don't understand this now, if we're moving forward, you will never come. I don't know how you will ever understand how to trade. So once I drop this video, make sure you watch it over and over so that you understand it very well. It is the same thing for bearish momentum, right? While the bearish, as Michael said, while the bearish candle in the bearish engulfing pattern shows strong selling pressure, sweeping prior buying bullish momentum, signaling a potential trend to the downside. All right, that's the same thing. Now you understand that, okay, fine. We were having bullish momentum. Buyers were present. Remember, I said for a candle to close bullish shows that there's so much buying volume, right? There are so many buying volumes. Now, what these candles are just showing us the relationship between buyers and sellers in the market. So if you are seeing a bullish candle, it simply means buyers are present in the market. Buying volume is there in the market. If you're seeing a bearish candle, it means sellers are dominating the market. Now, we notice that, okay, we had buyers here. Buyers were actually pushing the market to the upside. They were pushing the market to the upside. What happened? This candlestick pattern is showing us that the relationship between buyers and sellers is that sellers here have come in more than those who are buying. So if we had about 100 people that were buying something, right? 100 people that were buying something, and out of a sudden, 1,000 people are now selling to these 100 people. What do you think is going to happen? The prices are going to drop, right? Because these 100 people, they will not be able to buy this at a higher price. Therefore means the prices are going to start dropping. All right. So this is the relationship that is, this is explaining that, okay, sellers are now more than buyers. Therefore, supply is more than demand. When supply is more than demand in any aspect, in anything, in any business, prices must drop. Prices must drop. Okay. Prices must drop. That's why when you see after December going to January and so on, a lot of things now are present in the market, but people are no more willing to buy because the festive period is already over, right? So people are no more there to buy, and therefore what happens? Prices will drop down. So smart parents will be buying things for their children within those periods of time when the demand for those things are not yet high and the prices are low. All right. This is simply what this is telling us. Buyers were present and then sellers came in. It's just like, all right, these prices of shoes in the market are dropping because people are not buying. And then during December, as people want to buy now, boom, the prices starts to increase. It means a lot of people are coming in to buy and therefore the prices are increasing. And then now as they were buying during January now, the sellers are there. because they want to make money, and boom, there are no more buyers, and then the prices are dropping. Now, that is good. That is good. That is good. I am really happy that you guys have followed up with all this explanation based on this most important patterns of trading. Now we're going to move on to the next one. Remember, I mentioned there are so many patterns that exist, all right? But now these are the most important ones that I'm giving you. Now, this is one, which is like this. All right, this is how it is. So what is the name of this candle? What is the name of this candle? This is called a doji or an indecision candle. All right. It's called a doji or an indecision candle. So what does this candle tell us? What is the story behind this candle? Type it on the chat. Just look at it, and from the name, tell us the story behind the candle. And then we have this one. We have this one. And then we also have this one. Okay. Who is giving the right explanation? Indecision in the market, contraction candle, good. Contraction candle is good. Buy volume, contraction candle, that's actually an advanced way of saying it. I will move forward to that. Buying volumes is equal to sell volume. All right. Rejection candle. All right. So from the name here, indecision, it simply means buyers and presence, they are there in the market. They don't, the fight is a tie, right? It's a draw match. Nobody's winning. Nobody is winning in this one. So buyers and sellers, they are fighting. The bull and the bear. You guys know these animals, right? The bull and the bear. It's just like they were fighting and nobody's winning. All right. Nobody has won the fight. So it's a tie. It's an indecision. When you're looking at it, you know that okay, buyers are indecisive, sellers are indecisive. They're like they don't know whether this is the right price to buy this or this is the right price for me to sell this. It's just like you can have let's say you cultivate maize, all right, and maybe let's say around July you are thinking that okay, maybe a bucket of corn is about 10,000 francs, and then you are thinking that okay, should I sell it now? And then also people buyers are also there and then telling you that okay, bring the we'll buy it for 10,000, and you are thinking that okay, there is actually a higher price if I can sell for 20,000 if I wait till maybe December, and then you are thinking, should I sell it now or not? And maybe buyers also, they're actually thinking, if I buy this now, will I be able to resell and make profit? Like people are confused, all right? It's a period of indecision. So when that period happens in the market, a candlestick tells us the story that okay, this is what is happening here. Buyers and sellers, they are not yet okay. They are not decisive of which direction they want to take. So what do we do in this situation? We don't trade, all right? You just watch it. You wait for it for them to make their own decision, and then you will see the market breaking out to a particular direction, and we follow them like that. It's that easy, right? So let me quickly show you how this is going to look like on a market structure. Now we see this is going to be the opening price, and then this is going to be the close. Or if this is a bullish candle, this is going to be the opening, and then this is going to be the close. All right, so this candle, remember I said this is the opening price, which means it opens like this, and then it trades down, creates this low that we are seeing, and then it trades back up, creates this high that we are seeing, all right, and then it trades back down, and then it closes somewhere. Now, this is not an uptrend or a downtrend, all right? It's just indecisive. Maybe sometimes it can open like that, just go up, create that high, come back, create a low, go back up like that, and then close somewhere. It is a ranging market. When you see this on the daily, if a whole day ends up like this, when you go down to the lower time frame, you're going to discover that it's going to be a ranging candle, all right? It's going to be a ranging day, all right? I want to see if I'm going to possibly see a very good example of that. Let's just look at this one quickly. All right, if we should go down to this few candles here where we see them like they are not actually moving up or down. If we should go down to maybe 30 minutes, all right, we're going to see that okay, play this a little bit. All right, so we had we had some indecision candles here on the daily. That's why you see price here. It's actually not really interested in moving up or down, right? It's actually ranging. All right, so let me go back. Let's see if we're gonna see a nice example again. We are actually running out of time as well. Anyway, I believe you guys actually understand what I mean. When you see an indecision candle, it simply means that there is a tie between buyers and sellers, and that's not the best time to trade. Remember, I mentioned when you're having a bullish candle like this, or if this is a bullish candle, on the lower time frame, you're going to have an uptrend. When you're having a bearish candle on the lower time frame, you're going to have a downtrend. Now, when you're having an indecision candle on the lower time frame, you're going to have a ranging market. All right, it's going to open, range, and then close where it opens. Now, there is what we call a bullish hammer and a bearish bullish hammer and then inverted hammer, which is the last two ones that I draw. This one, it looks like a hammer, right? Some people call it a hanging fruit and all that. I think this name is actually, or you can call it a bullish rejection. All right, I'm just going to give you the technical name, which is the best. You can call it this one, a bullish rejection. Now, this actually means that buyers rejected price and then it closed right up here. Now, if you look at this candle, it doesn't mean it opened and not just closed here. When it opened, it actually traded right down like this. At some point, it was looking like this, and now buyers came in. When buyers came in and the candle was still open, buyers were pushing back prices up. They were pushing back prices up. They were able to push price right up to price closing at this point. So what do you understand with this one? It actually shows that buyers came in here and they did a lot of work. So which means buyers are actually in control more than sellers, which therefore means that the market up and traded down, all right? And it was at this point, then what happened? Buyers came in and they were able to push price right up to closing slightly above the opening, right? So we expect this trend here to actually continue, which means that there's a possibility for the next candle here to continue to the upside. All right. Now it is just the same or the opposite for the inverted one, or you call it a bearish rejection. When I say bearish rejection, it simply means sellers have rejected price, right? They have rejected the price. It's just like, okay, you go to the market today, you want to just increase the price of something that you are selling, or how do I put it? Yeah, and people that want to buy, they say no, you are not buying. What do? You have to reduce back the price, right? Is that easy? So this simply means sellers here are more they are the ones actually controlling. So the candle color does not actually mean that much when you are looking at this one. You study more of the rejection length. All right, we are more interested in the rejection length. Now, this is just a possibility that the market can continue down. All right. Now, this is just a possibility. Now, why did I say it's just a possibility? With all these candles that I have given you guys, you need to understand something. It's not everywhere on the chart you're just going to see a bullish engulfing and you expect price to just keep moving up. No, it doesn't work like that. Now, for example, let's look at this point here. How many bullish engulfing candles do you see here? I already see about two. If you look closely, you are going to see that we have, this is a bullish engulfing pattern here. This one open, close above this one. This is another one here. All right, this is another bullish engulfing. And what happened? Buyers went up, right? The market pushed up. Now, that's just one example. Now, when it comes to, this is another bullish engulfing, there are actually just so many of them, all right? There are so many of them. Everywhere you see on my screen that you have a line like that, it's a bullish engulfing and so on. There are going to be a lot of them. This is one nice one. So this is the secret on using this type of indicators or this type of patterns, right? Now, if you want to trade bullish engulfings, if you want to trade a bullish engulfing, take note, you trade it in the line of the trend, which means if I'm having an uptrend, where am I supposed to buy? Higher lows, right? I'm supposed to be buying higher lows in an uptrend. I'm supposed to be buying these lows, not here. Now, what do I want to see? I would like to see buyers overtake the sellers that were here in the form of a bullish engulfing. The sellers that were here, I would like to see buyers overtake them in the form of a bullish engulfing. When I see that, it gives me confirmation that, okay, the buyers here have actually taken over. I can now get in on my trade when the candle closes. The same thing here. That's how you trade it, all right? You trade bullish engulfings in the direction of the market. You trade bearish engulfings in the direction of the market. Just like, for example, here, you can see this nice bearish engulfing candle here. Very huge candle, all right? When you see this, nobody will be there again to tell you that, okay, something is happening here. Just see the size of the candle overshadowing the previous one after a pullback. Remember, in a bearish market, you are not selling here. You wait for the lower high to form before you engage on your sell. All right. We're roughly with 3 minutes left. If you have a question, you leave it on the chat. With time, we're going to talk more on some candle formations, but these are the most important, and I think the all that you need. All right. There are so many other patterns inside bars. There are ones that are called pregnant marabuzo. There are so many ones. Oh my God, there are so many type of candles, but you should not get yourself confused with all of them. It's with my experience that I'm telling you, these are the best ones that you need. All right, these are the best ones you need. We need these candles just to guide us. All right, not that we are basically relying on them all. We are just looking at it to guide us. Why? Because sometimes you're going to actually see one like we saw here. All right, this is a bullish engulfing, but price actually did not continue up. Why? We are not seeing it at the right point. All right. So, which means even though I see it here, I'm not going to buy here. Where am I supposed to buy? When the pullback is over, when there's a pullback, right? Before I think of buying. So, it doesn't mean that anywhere you see a bullish engulfing on the chart, you're just going to jump in. No, we use them as a guide and as a confirmation. You understand? We use it as a confirmation to get on our longs and so on. All right. So there are actually a lot of them. When you go to your chart, try to mark out those bullish engulfing candles and so on. Now, when you have dojis, also it depends where you have them. All right. You can have a doji candle like this. Now, if this is a tie between buyers and sellers, all right. Now, let's say, for example, okay, good. This is the market was selling, and at this point now we are having a tie. Look at these dojis here. So at this point, there's a likelihood that the market can break up to the upside. Same can continue to the downside. But first, you have to wait for the next candle to show you the direction. All right. You don't just see it and then you start anticipating price to go to any direction of your choice. Look at this one here. We had a beautiful pullback, and you look at this engulfing candle here, showing you directly. Now, look at something here, guys. This is what I say. You don't trade them blindly. We're just going to be using this as a guide. This is a huge bearish engulfing. This is another one. But why does price keep continue going up? It doesn't mean that in an uptrend, you are not going to see bearish engulfings. You're going to see them, but you simply ignore them. All right? Because it's just showing that at that particular moment, buyers are actually more than sellers, but it is not what you're going to take home. All right. So I think I've talked a lot. My voice is going down. So if you see a bearish engulfing here, it just shows that, okay, at this particular time frame or at this particular, maybe within 2 hours, buyers were more than sellers in the market. It doesn't mean price will just keep going down because you've seen engulfing. No, we are in an uptrend. We are more interested in bullish engulfings. We ignore this one. That's why I said we're using it as a guide. All right. This is the candle formed by USD today. All right, good, good. Thank God you have already seen those things on the chart. All right. Good, good, good. I'm really great, glad that it's ranging in the raw time frame. All right. I'm glad you guys have participated so much today. Just go to your chart, try to study this. All right. It's going to help you.